What's going on, guys? Raymond here from Supreme 6. On today's Minute Monday, I'll be telling you why the soaring real estate prices are here to stay. So real estate prices all across Ontario, especially in the Greater Toronto area, seems to be on fire, and in fact, continue to trend upwards. Many are confused as to why this is happening, especially when we're in the middle of a pandemic. Unemployment rate is up, while a lot of small businesses have been forced to close, filing for bankruptcy. So here today, I'm going to talk about the one main reason that is driving real estate prices up that not too many people have talked about. So let's get right into it. The not so obvious reason that's driving real estate prices up is the printing of money. Anytime money is printed, this surplus of money gets distributed back into the economy in the form of government stimulus or relief packages. When new money is printed and injected into the economy, a lot of that money finds its way into various financial assets such as bonds, equities, derivatives, or even real estate simply because it's looking for a return. So when we think of inflation, we think of how much our money can buy us. But rarely do we ever pay attention to the other aspect of inflation that's happening right in front of our eyes. So for instance, when you jump onto the Statistics Canada website and do a quick search on the rate of inflation in Canada for say 2021, you'll find an inflation rate of just 2.2%. So if you pause to think about this for a moment, and ask yourself, does it really make sense to you? Did the cost of living only go up by 2.2% just in the last year? Of course not. Surely there's no way the cost of living only went up by 2.2%. Instead, as I mentioned earlier, a lot of that new money ends up making its way into various financial assets such as real estate. This explains why few people can afford to buy a home while most of us have to rent. Every time new money is printed, there is immediate inflation on asset prices. Now, of course, there are other factors driving up real estate prices, including low interest rates making the cost of borrowing very affordable. We have global supply chain issues at the moment. We have rising costs of labor, rising costs of materials, land, development charges, which all ultimately gets downloaded back to the buyers. And of course, we have that continuous imbalance of supply and demand. But it's these financial policies from the government that's really the underlying reason that's driving the market. So we know the Liberal government has today committed over $100 billion in stimulus spending and will continue to offer stimulus until the end of the year. Our neighbors just south of the border are spending trillions in stimulus as well, which in effect will further drive real estate prices up, and this is just the beginning. As an investor, it's important to understand the underlying reasons as to what's driving this growth, and it's up to you to protect your own purchasing power. This is why we need to look for assets that will help preserve our wealth. Remember, it doesn't have to be real estate. It can either be in stocks, gold, silver, or even Bitcoin. So take this for what it's worth. As always, I hope you found this helpful, and feel free to use this information to help you navigate with your investment decisions. If you have any questions or know anyone that can use our help in either buying, selling, or investing in real estate here in the Greater Toronto area, please don't hesitate to reach out to me or any one of us here at Supreme 6. That's it for this week's Minute Monday.